Hello, this is Tom Clabb with a special report for SRS Rocco. Today we don't want to get into premiums with gold and silver, even though they're a story in themselves, and how to look and follow them and try to pick the next move. We'll update that at a later date. What I want to get to is what questions have been coming in. It seems like my consulting business doubles in the summer every year when everybody else is slowing down. Our investors are educated and they're trying to figure out what the next move and how to diversify and spread their assets over different categories to where if one goes up, another may go down, but overall you're protecting yourself for a total return. So I always believe in listening to people that have great track records. And certain Ray Dalio has been the one that you've probably heard me mention the most over the last decade because he has been the largest money manager in the world. And he has a $19 billion net worth, and certainly someone, when he speaks, you should listen if you're not. But he's a chief investment officer of Bridgewater, and $150 billion under management and $19 billion net worth personally. And what he says on June the 5th, and I'll read it, is that we are at the beginning of a big cycle debt crisis, that you're producing too much debt and have a shortage of buyers. This is why interest rates have exploded. Curves are inverted right now, which we've talked about, but we need to mention again. When you see a 2-year treasury and a 10-year treasury, then historically you're always going to get more interest on a 10-year because you're tying your money up for longer. Now all of a sudden, because we've had $1 trillion deficit in 1 month, last year was $1.5 trillion for 12 months. We've already had $1 trillion in 1 month since the debt ceiling was raised. And now we're trying to see, go in there and give debt relief to people that had student loans. Where's it going to come from? It's going to be printed. It's going to devalue the currency. And we'll get to that in a minute because that's the most important part. So right now, if you want a 2-year treasury and you believe and feel safe putting your money in U.S. treasuries, then certainly 2-year treasuries are a heck of a deal when they're paying 1.5% higher a year than a 10-year treasury. So yes, I do advocate if you do want to stay with government treasuries, buy the 2 years, don't buy the 10 years, and you're going to get a great return for 2 years. But what I like is the end of Dalio's speech when he says that I like to invest 10 to 15 uncorrelated assets. As an investor, we can lower our risk 80% by taking and spreading your assets across 10 to 15 uncorrelated assets, like gold, like silver, like these inverted bonds, like real estate, like income stocks, like growth stocks. All this spread, you can still invest in what you want to invest in, but you're putting different things in there that are going to do well. So we look at it and say that. Do one more example before I get to the beef of what I want to talk about. Seth Klarman, the CEO of Ballpass Group, he's also a billionaire, says, we've just seen the tip of the iceberg in the banking. We've now gone over 200 banks cannot meet the stress test, and some of them are big name banks. And he says that we have just begun. There are red flags popping up everywhere as all this country wants to do is spend money and run up debt and put us in a bankrupt situation. And you're going to see in just a second what I'm talking about. But what he's talking about is what's worried me since we went in there, and that is a red flag on government bailout of banks. We were told in 2008 and 9 there would never be another, ever, a government that they would ever do that. And yet here they've come in and taken these banks and bailed them out, the government. It wasn't a bail-in. So what Claremont is saying is a bail-in is still in play. Just because 4 banks that went under were able to have the insurance by the government doesn't mean the next 4 will. And if that happens, I mean, the dollar is going to be almost worthless in no time. We're still hearing rumbles of Nigeria and 105 small countries as early as next month are leaving the dollar as trade. We've already seen Argentina leave it. We've already seen India coupled with Russia and using the Chinese yuan. So it's not good for the dollar. We're lucky that it's still sitting at 100. But this is what I want to talk about for the rest of today, and that is the U.S. Last September, I put out, anybody listen to me? In September 2022, we saw the dollar top out at 123. I said, folks, it's going to hit a slide and it's going to slide. It's going down to below 100. And certainly it's done it. Today we've seen it go from 123 in September, 10 months ago, to today, 100. The dollar has gone down in 10 months 19%. Let me say that again. 19%. The dollar has gone down. And anybody that's listened to me over the years knows that there's a correlation to gold and the dollar. Always there's a correlation. And when the dollar goes down, gold goes up 1 to 3%. Now, right now, it's in September, when I was on these shows talking, I said I was looking for gold to go down, and it was 1660 on that day last September. Today, as I record this, on the 17th or 18th of July, we're looking at gold at 1972. Gold is up 19%. 19%. Exactly what the dollar is down. That's where we are today, 10 months later. Silver is even more outstanding. Silver's up 24% since last September. And we could get into stories about premiums. Like I said, I want to stay focused on this. So now we see the dollar at 100, and I've told you all along, the magic number is 92. When it goes below 92, it goes off a cliff. The Japanese will liquidate their treasuries. They have over 3 trillion. The Japanese have over 4 trillion. They'll drop all these, they'll liquidate them, and you'll see gold go up 50, 60%, and the dollar go down 13 more percent, 15 more percent. But you've got to watch it now because it is very close. You need to be watching it every week and following the dollar. It's your most predictable indicator to follow when we're in a situation we're in right now. So this is the main thing I want to talk about now. The other thing I want to talk about is storage. Everybody's moving their money. They're scared to death, and there are going to be other major problems. So now they're worried about the banks not having insurance for over $250,000. I mean, the 2 biggest sales this company's ever made were major companies pulling money out because they're scared to death of that there's not any insurance to cover it. None, over $250,000. So we think you should, if you got that, look into it. But we have the lowest storage in the world. The client, I'm prohibited in writing from telling you what the rate is. But if you're a large investor and you've got over $100,000 in some deposit program with somebody, you need to call me and talk to me or Dan, because we can offer you something that nobody Not one person in the world can offer you a lower storage rate. We had a client call, a potential client, call last week, and a friend of his had told him what we did for him, picked up his gold at the other place where he was paying 75 basis points a year and had several $1,000,000. So we came in and dropped that substantially. Just think for every 1% you drop that, every 10, 15, 20 basis points, you're talking about significant savings to you, the investor. So we can fix it not only where you, Steve, on these programs already showed you, we're the lowest people out there in price, quickest delivery and service, but now we want to help you get positioned and save you tens of thousands of dollars. But we've got to know what you've got and where your money is currently stored and give you a rate comparison. And then once you get it moved, now you do have to buy something. We don't just do that out of the kindness of our heart. We're in business to make a profit. But we can give you a rate that you will find unbelievable. And we've expanded, the company we're working with has expanded the rate is many thousand more storage because they're working to be the biggest storage in the country. So please call us if you bought from anybody and you've got it in storage where you've got it insured and stored, but they're charging you a fee for a combination of those. But if you're anywhere really over 50% or 50 basis points a year, you need to call us quick because we will not be able to do this forever. We can get you moved, get you a much lower storage rate, insurance rate, and but once again, we can talk about it and design for you. And I'm available. You can talk to Dan Wright, 800-247-2812. That's 800-247-2812. So hopefully we'll talk to some of you. And like I said, we'll come back with a special in a couple months and talk about what's going on with the premiums. We see premiums going down because price of silver going up, and that's what always happens. But it seems like there are new people all the time. We want to keep them in the loop. Also, the biggest thing going on right now is IRAs. Baby boomers like my age are retiring millions per day, and they're leaving their companies and doing 2 IRAs. One self-directed IRA for gold and silver, platinum and palladium, and one for stocks and bonds and cash. So that way you have 2. And that's what is going on. Dan has been my specialist on that for 20-something years. So you can call us at 800-247-2812, and Dan can help you set up. We cannot be custodian, but we can be your source, your agent to buy and sell at our already low commissions and rates. So anyway, we think the fall is going to be explosive. I didn't get into all the other issues going on with debt relief and deficits soaring to unbelievable heights, countries leaving the dollar, all that we're going to get into later. But I've given you enough homework right now to get going. So hope we'll get to talk to you. So with this SRS special report, this is Tom Cloud signing out.